Hi, this is Mike Wade and welcome to the weekly video featuring Tom's tools and yours truly. Let's get to the disclaimers. Stock and options trading has large potential rewards but also large potential risk. You can actually lose money trading the stock and options market, and it's important that you not trade money that you cannot afford to lose. It's also important to note that I am not an investment advisor. I am a trader, and nothing that I share with you in this video should be construed as investment advice. You can read the balance of the disclaimer at your leisure by pausing the recording. Last note is that all prices are in US dollars unless noted otherwise. In this video, we're going to talk about Tom's trading tools, the earnings effects ranker. So earnings. I want to talk to you about earnings patterns and how you can actually trade them. Earnings is a really wonderful, repeatable, and reliable pattern that historically produces consistent gaps in stocks, some stocks, and we can count on that history to repeat. Sometimes it doesn't, but that's our best guide to the future. So I want to talk to you about finding these best earnings patterns using the scanner. I want to make sure you understand how implied volatility works before and after the earnings announcement, and then I want to talk to you briefly about how you can use straddles to profit on the gaps. All right, so what's a gap? A gap, here's a stock on a stock chart on Trip. A gap is actually a gap in the stock, on the stock chart. And you can see on this chart there's a handful of gaps on the chart. And notice these gaps actually correspond with an earnings announcement as signified by these green E triangles. All right, so this is a chart on TripAdvisor, a recent chart as of the time of this recording, which is September the 17th. And you can see a number of gaps in the chart. Right here, after the earnings announcement, the stock closed here and opened down here, creating a gap down in the stock. All right, so there's your gap down. Here we had an earnings announcement. The stock closed here and then opened way up here, creating a gap up in the stock. The next earnings period, another gap up. The most recent earnings periods, we ended up with a gap down. So here you have a stock that's gapping consistently on the earnings announcement. So what do you think is going to happen the next earnings announcement? Well, if history repeats itself, we could reasonably expect that there'll be another gap. Question, which direction? It has a history of gapping both ways. We've got a gap down here, two gaps up, and then another gap down. So we don't know which way it's going to gap. So what do we do with that? Well, if I want to trade the directional move, what I need to do is put on a strategy that profits either way. And that strategy, the preferred strategy for gapping stocks, is, as you might expect, the straddle. So we'll come back in a few minutes and I'll show you how you can find these stocks and then feed them to our straddle scanner. All right, so sometimes stocks gap. I'm going to show you how to find, and there's really a lot of these. I'm going to show you how to find these with a very simple scan in the earnings effects ranker. Now, one thing to note is that the implied volatility of the options, another way to say that is the premium or the demand impact on the actual price of options, will increase into the earnings announcement consistently. You can see that the implied volatility on the short-term options actually rushes into the earnings announcement. There's the earnings announcement. And what happens the next day? That implied volatility, those expensive options become cheap the very next day. So if you own these options, what there is to contend with is this thing called IV crush. So just be aware of that. Now, if you do a lot of back testing, and that's advisable, and using the system I'm about to show you, you can find the stocks that actually survive the IV crush, and that would be your homework if you choose to actually embrace this earnings system. All right, so let's pop into the tools right away. I'm going to go into stocks. I'm going to go into stocks analysis. This is Tom's tools, of course, and then I'm going to go down to earnings effects. Now, the earnings effects ranker is really a very a lot of bells and whistles, in other words, and I'll cover some of it. I don't have time to cover every bit of the tool in this short video, but you can also go to the help at any point. Click help and it'll go through every bell and whistle in the scanner. All right, so up here you'll see stock price or IV change wizards. Typically, if you're looking for straddles, you're going to want to look for the best change after the last 4 earnings periods. What does that do? that produces an average directional move post-earnings, the gap in the stock, in other words, for the last 4 earnings periods. All right. If you want to look for the biggest gappers over the last earnings period, you can actually just go after that too. All right. So some people use that. Some people actually use best price change before the earnings announcement. If you want to look for pre-earnings moves, I'll talk about that in another video where we can actually go directional into the earnings announcement. But for this scan, what I want to do, keeping it very simple, if you're trading straddles, you want to profit on the stock price movement, the gaps, then this is the option you want to check. Again, this is producing an average gap distance, the actual average price move post-earnings, the size of the gaps, in other words, over the last 4 earnings periods. Down here, you can see days to past or future earnings wizards. You can actually turn on earnings requirements as well. You may choose to turn on straddles 1 to 30 days to future earnings so that you're only dealing with stocks that have earnings coming up in the next 30 days. You could also use 30 to 70 days if you wish, if you want to look further out in time. The system also gives you the abilities to do calendar searches or sideways searches or condors and butterflies. No time to talk about that here. I'm going to turn this off, in fact, to keep it simple. And we're just going to scan for the best price change after the last 4 earnings periods. And I suggest you do that on the S&P 500, the biggest market cap stocks in the market. The next step is to click search, and that will go out and start looking for the very best gapping stocks. And what happens is when the results come back, what you'll see here is the biggest gapping stocks on the sorted in a descending fashion here. So what you have here is the stock, the company name, the stock symbol. You can go after the chart, check the news. You've got the recent close. You also have, and this is the golden goose column here, this is showing us that on TripAdvisor that over the last 4 earnings periods, you can see the individual moves here, over the last 4 earnings periods, Trip gaps an average of 19.98%. That's almost a 20% gap overnight in Trip. All right, so talk about a great straddle candidate. This is the best way to avoid IV crush, is to have the stock move very, very big. And these top 2, Foot Locker and Trip, move almost 20% each. All right, so this shows the component moves as well. So Trip moved down 16%, moved up 24%, moved up 15%, moved up down 24% over the last 4 earnings periods. The number of earnings checks checked, the days since the previous earnings on August the 1st, and then the estimated days to the next earnings announcement, which occurs estimated on 11/6/2018. So it's a very simple list. Next question is, what do I do with this list? Well, here's an idea. Why don't you save the top 50 of them and put them in My Stock List, click Replace, and that's going to copy the top 50 biggest movers in the S&P 500 into My Stock List. And then what I can do is I can go right into searchers. I'll select single strategy and then find my straddle. There it is. I missed it. Go to straddle. And this is a simple scanner that just takes a list or even a stock symbol. And again, we're using My Stock List. So let's pop My Stock List into Stock Lists. And we've got also the ability to put a particular stock. You can sort by various methodologies. I'm not going to do any sorting. And then I'm going to click Search. And this scanner will go out and give me a list of potential straddle candidates for stocks that gap the largest, the 50 largest gappers, right on my screen. So you've got Walmart, the first one, Dollar Tree, and you can see the various data here. I'm not going to cover straddles in this video. I'll do that in another video, but this is how we get here. This is how we provide the straddle finder the very best candidates. All right. Now, straddle entry rules. Now, if you're going to be trading straddles, first off, in order to find the straddle candidates, what you do is you pop in to the earnings effects ranker. You select price, best change after 4 earnings periods. You select the S&P 500 as I've shown you. You click search, and that will produce a list of the very best gapping stocks. And then you can save those stocks in My Stock List and then feed it into the straddle. So let's make sure we understand how to trade straddles. They're very, very simple. It's really about entering on 30 days before the earnings announcement by buying a straddle. You want to do that 30 days before. You want to use 60 to 90 day at the money options. Make sure the strike price is as close to the current stock price upon entry as possible. And then you want to exit after the earnings announcement. Again, after. Play the gap. This is a way to play the gap. All right. That is a wrap for this video. There's a lot more coming with the earnings effects ranker, but that'll keep you going for now, and I'll see you next week.